Hi, my name's Steve Schwetz, and I'm the managing broker for Mesa Properties, and you are watching the first in a series of interviews that we're doing together with Michael Melendez, who's one of our agents and our lead guy here in our Victorville office. So, Michael, what are we talking about today?
Well, I think the topic is credit scores.
Absolutely, credit scores, which is a very important thing. First of all, hopefully we're starting with the basics here. What is a credit score?
So a credit score pretty much tells a lender or a bank how likely you are to make your payments based on, your track history with your car payments, with your credit cards, all that good stuff.
Got it. So if I open a bunch of credit cards, have a car payment and my phone bill and all that other stuff, and I pay them, but I miss a month or two every once in a while and things like that. Does that help me or hurt me?
Well, it's going to affect your credit score. So depending on how lax you are, your credit score is going to reflect that.
Okay.
So you do want to make your payments.
Be on your game.
To have a higher credit score.
Okay.
So that you could potentially get another loan.
Okay.
Or better interest rates.
Okay. So let's talk generally about loans then, the different type of loans that people can get on a home. Now, obviously, the best kind of loan to get is like what I call a friends and family loan, where you got some rich uncle or something who's willing to give you a bunch of money and then just you make payments whenever you want.
Mm-hmm.
But if for those of us that don't have a rich uncle somewhere that is going to give us that kind of a loan, talk a little bit about the loans that are available for people. So like the term FHA versus conventional, VA, maybe talk a little bit about those.
Right. So you're going to have a few, and your most common are going to be a conventional loan.
Okay.
Conventional loans typically want you to put a minimum of 5% down.
Okay.
5, 10, 20% down.
So doing the math, you buy a $300,000 house, you're going to need
$15,000 at the very minimum.
All right, plus closing costs.
Exactly.
So pretty high bar for a lot of people to jump.
Yes.
Okay.
So the next option is typically FHA. So that's only 3.5% down.
Okay.
So you can get in for a smaller down payment.
Right.
And the best option, if you're, we're in the military, is 0% down, 100% financing with the VA loan.
Okay. And then obviously your payment's going to be a little bit higher, but you don't have to have as much money saved up going in.
Yeah, but also the benefit to the VA loan is you're not going to have to pay any mortgage insurance. So that's a big plus.
Okay.
Anytime you don't put at least 20% down, you're going to get tagged with an extra bill, on your loan.
All right, so if you're really interested in getting a good loan, maybe you should think about joining the military. But if not, and you want to go to conventional financing or FHA financing, those are kind of your two options. Now, talk a little bit about, we mentioned the credit scores. I actually heard that the credit score, somebody can actually go up to, I believe it's 890 is what somebody had told me once before. But I'm not sure if that's true or not. But let's talk about where the normal people live. What's a typical credit score, assuming you haven't missed any payments and you're good to go for an FHA or conventional loan? What's the minimum score you should have?
So the minimum score you should have is a 580. Now, you don't want to be
the 580 guy.
Yeah, the 580 guy. Because if you're the 580 guy, you're going to pay a higher interest rate.
Right.
And you're going to have to come in with more money out of your pocket.
Right.
So that's the caveat there.
Okay, what would be like an example? What kind of number do you need to be like a tier 1 or whatever terminology? I don't want to use a bunch of lending lingo, but what's a guy that comes in or a couple that walks in and says, "Hey, this is what my FICO is. Great, you're ready to go. You're really strong."
Yeah, I mean, you typically want to be like 740 plus.
Okay, so 740.
So 740 is kind of the bar that hey, I want to be above this.
Okay. Got it. And then let's talk a little bit about the minimums that you would need typically. So, for instance, on a conventional loan, what do you typically need for?
About a 620.
Okay, so 620 and above. So a lot of room between 740 and 620 to be in there. How about some of the other ones?
Well, for a VA loan, they're pretty much all around the 600s. 620, 640.
Okay.
That's kind of where you want to be. The 580 guy, that's going to be rough.
Okay. Now, what can somebody do, like if they're saying, okay, I want to buy a house, I've got the income, I know I want to stay in the area for a while. What can they do maybe in 60 to 90 days to try and boost their credit score?
Well, try to pay off some of that debt.
Okay.
A lot of times, you want to go out and you want to buy a house, but the lender's going to say, hey, you have 2 car payments, your credit cards are maxed out,
Yeah.
and your debt to income is going to be too high.
Okay, now that brings up a good question. Should you, let's say you've got 4 or 5 credit cards, and they're all pinged at, let's say your limit's $5,000 each. So you've got 4 cards. So you got $20,000 in cards.
Mm-hmm.
Should you pay off one card and close it off, or should you make payments across the board on all those cards to get them down?
So a good rule of thumb is to kind of have all of those accounts down to the 30% mark.
Okay.
So that's kind of the guide.
So you're better off not just knocking it down one credit card at a time, which for those of you that watch Dave Ramsey, he talks about paying off one credit card, focus, and then go to the next card. If you're looking at buying a house,
right,
that's not necessarily the best strategy, right?
Exactly.
Yeah, spread it across all those cards.
Yeah, and another thing you don't want to do is you don't want to go out there and, you don't really want to go out and close an account, and you don't want to open new accounts.
Right.
So just keep that in mind.
Yeah, so kind of stabilize your credit, get the limits down, no closing credit cards, no opening new credit cards, no missing any payments. That's a big deal, right?
Yeah, that's a huge deal.
You're going to go in the wrong direction.
Especially don't do that while you're in the middle of purchasing a home.
That always makes it fun for the real estate agent in the transaction. Watch their whole deal fall apart.
Right.
Okay. What about in general debt to income ratios? I know this is a little bit off topic from the FICO, but I think it's still relative to say that it's one of the main factors to figure out how much you can buy a house. What kind of ratios do you look at?
I mean, you typically don't. I've had some lenders say, "Hey, you can go up to 58%."
58%.
58%.
Now that's not just on your ratio of total debt servicing, or just on your house payment.
Right. No. That's when you add up all your debt and they're taking a look at your income. The 58% mark, and that's really high. You guys want to be, 30s, low 40s.
Right.
I mean, anything below, the lower the better.
Right. Now, do they still use the term front end and back end debt load, or something like that?
The front end and back end ratios, yes.
Okay, so the front end ratio is what? What makes that? Oh, well, no, I think you would never say that. I believe the front end ratio, I think your front end is your house payment and your taxes and all the stuff that's related to the house. That's your front end, I think. And your back end is your full load. What's your car payment? What's your alimony? What's everything else? I don't know if alimony's in there or not, but definitely your regular debt that you would have. If you own another house, that's all going to be on your total debt load.
Right.
Pretty sure that's the number. Okay. So in general, do you know what the front end number is? Do they have that? Do we know what that is? Okay. But the bottom line is you want to try and be as low as possible on your debt loads.
Right.
Going forward. Okay, great. Well, if you want to continue watching, we're going to have a bunch of these videos that are just educational in this talk format. So hopefully you'll subscribe or go to the next blog that we get. If you have any questions, you'd like to buy a new property and or used property, and you're a home buyer, first-time buyer, somebody that's trying to trade up in the market, we would love to help you out at mesaproperties.net, or just give us a call. Thanks.
Take care.